All right, should we zoom in on Zoom here and see what's going on with that company? That was hot during the COVID.
Oh yeah, I'll get into the price action there when we get into it here. But yeah, some interesting numbers for Zoom to say the least.
All right, Zoom again. Their symbol is ZM, software application. Ooh, another software company. Only about 2.5% shares short on the float side. 77.6% institution, means there's a fair amount of people that hold it directly. PE ratio 17.9 versus 43. That is good. Price of sales 6 versus 5.2. Yeah, that's okay. But price to book value is good. 2.9 versus 5.1. And price of cash flow is good as well. 13.9 versus 22.4. And a decent PEG ratio of 2.3 versus 2.8. And again, that shows what you're paying for the future growth of a company. Wow, their earnings for Zoom were up 70.8% over last year, well above the initial 16.3, but sales didn't match. Sales were only up 3.8% over last year for Zoom. Industry was up 7.8. The 5-year earnings per share growth estimate is 7.5% for Zoom, half the industry at 14.4. Unfortunately, they do not pay a dividend. Look in the balance sheet, current ratio very good, 4.5 versus 1.7. Debt to equity is 0. No debt in the balance sheet. The industry is at 0.5. We do see a very good, gosh, they need to reduce their costs that we pay Zoom because their net profit margin, 33.2%. They make a third of our revenue, profit margin. That's pretty good. We do see return on equity is 17.2 versus 21.3. Free cash flow is $2 billion versus $3.4 billion for the industry, so that's okay. Yeah, I don't know. I mean, I guess it depends what's going forward if I like this company or not.
I'm going to start with the positive here, and Zoom maybe is in the wrong business. Maybe they should be in the private equity realm. It looks like Zoom popped 11% on Monday after Baird pointed out the company's investment in artificial intelligence startup Anthropic could be worth between $2 to $4 billion. It looks like in May 2023, Zoom revealed that it had invested in the company. The companies did not disclose the value of the investment, but Zoom reported making $51 million in strategic investments that quarter. It is assumed most of that went into Anthropic. But again, the startup is now currently valued at $350 billion, suggesting Zoom could see a return of roughly 78 times on that investment. So that was a big positive for them. Obviously, having $2 to $4 billion in this asset on their balance sheet would be beneficial. But the thing is, it's not really a business asset, right? That's not a reason to buy Zoom because, you know, if you liquidate it or let's say Anthropic goes down, it's not really improving the business operations, which is what you want to think about when you're buying a business long term.
Yeah, I was going to say that because there's not cash flow coming from it. There's not earnings coming from it. It's an investment that they hold. And congratulations, do very well. And I don't think we ever looked at Anthropic. I mean, I don't know what their numbers look like. Is it worth $70 billion?
Oh, we can't look at Anthropic. It's a private company.
That's right,
yeah.
it's private. That's
Could be going public this year, potentially, maybe next year. But
that'll be one of those high flyers, I'm sure.
Oh, yeah.
So and that valuation, it could be good or it could be overdone. But again, right now it's benefiting Zoom, I think is what you're saying.
Yeah, I mean, it benefited Zoom because it was kind of a positive surprise, to say the least.
Yeah.
And I mean, it does help because it obviously lifts Zoom's assets, but it's not going to improve earnings and cash flows.
Was it up a lot on Friday or when did this come out?
Monday. So it looks like their 5-day return, it kind of fizzled out. It was only 3.94%. You look at the 5-day chart, it goes, whoa, zooms way up on Monday and then kind of fizzles out. But talking about fizzling out, let's look at the current price here for Zoom first. $92.10, 52-week range. That looks pretty good. The low here, $64.41. The high, $97.58. The 1-year return, nothing special, up 5%. But the 5-year return, ouch, down 75%. And you want to talk about a massive decline. And again, why you don't get sucked up into the hype of something. The all-time high for Zoom occurred on October 18th, 2020. Any guesses?
I would say 500.
Close. $588.84. Wow. So it is.
And it's at 90.
92. Yeah, that's rough.
And I got to say, it is kind of surprising because Zoom, we use it. It's very well known. But I guess even though they charge a 33% for the net profit margin, they still don't seem to be making much money.
I mean, they're doing fine. It's just, again, another example of a good business that just was assumed everybody was going to stop meeting in person.
Yeah.
And it still has a function. Obviously, we use it, as you said. I know businesses use it, but that mass adoption never took place. And that's why you can't assume that when you're investing in something and why you can't chase the hype, because once it fizzles, it can fizzle quick.
Yeah, and I still, people say, can we do it virtual? We can, but it's so much better to be in person. You get so much more in person than trying to go through a Zoom.
Oh, absolutely. I totally agree with that. But again, I'm going to say it's a nice supplement. It's a nice tool. I just had a Zoom with some clients in Arizona. So, you can't always do it in person. So it did, I'm going to say, shrink the world in a way that benefits us in business. So, I mean, it has its purpose, but it again, didn't displace human interaction as I think people anticipated.
I know we got a potential one with somebody up in Seattle, I think, next
Yeah.
week. So, I mean, there's a need for it. But if possible, I'd like in person.
Oh, totally. Yeah. I mean, it definitely helps. But I think it was a big benefit. And I was going to say, you remember during COVID, the saying, the new normal?
Yeah.
It's like, no, this is not normal.
This is not going to last. Yeah. People are human nature. They want to be in contact with people.
Yeah, well, now let's get back to the numbers here. It went on our little side tangent. But looking forward for Zoom here, we go to January 2027. Estimated earnings per share here, $6.06. That would give us a target sell price of $100.60. So it would be a hold based off the valuation here. I'll tell you, I would not be buying at these levels. I mean, it's close to its 52-week high. It is close to, again, our target sell price. I mean, maybe on a pullback it'd be interesting, but I just think it is also too singular. I don't know if I'd get into a business like this because of, it reminds me of like a GoPro. Remember how hot GoPro was?
GoPro's another hot one.
I mean, something could come in here and just totally wipe this business out.
What was that number you gave again for the 1 year earnings?
For January 2027, $6.06.
Okay, there's something strange here because I'm using we use Stock Rover.
Yeah.
Stock Rover for January 2027, 10 analysts. Do you know how many analysts?
30.
Okay, so they only showed 10. So I got $3.55.
Wow, big difference.
Big difference, yeah. So, but again, you got 30. I kind of like that number better.
Yeah, and I mean, the only thing is, is there stock-based compensation that maybe some analysts are factoring in? So, I mean, there are other considerations here, but I think no matter how you shake it, I wouldn't be buying Zoom at these levels.
Now, what's funny is that 2026, there's 29 analysts, $5.97 from Stock Rover.
Yours is $5.97. Mine's $5.97 too.
Yeah. So for some reason, we're missing about 20 analysts from 2027. But even so, still not a buy, unfortunately.
And we'd be shifting out to 2028 here in about a month or so. But still, that number is still about 15 times those future earnings. I mean, that's the thing. The earnings growth now is very subdued. This year, looking for earning growth of 7.7%, but next year, just 1.6%. The following year, 3.3%. So, I mean, this company is not going to garner a above-market multiple with very limited growth.
And this, I think, would be another good business if it went on sale. Because, again, it is needed. People use it. They're making money. But it's just still got that hype behind
That's
it.
weird. I don't even think I'd buy it, as I said. I think it could be a GoPro 10 years, 20 years from now.
I don't know. I think it'll still be around. I think if I get it for $50 or something, I think it'd be pretty good.
Maybe.
Yeah. All right. I guess we'll move on to that one.